Even the country's wealthiest citizens are considering some cutbacks. This, as economists warn, America's financial troubles may spread far more widely in the months ahead. Now there's new concern about the state of U.S. banks. Jim McTagg is Washington Bureau Chief of Barron's Weekly. He's here with us now. And we also have Susan Stewart, President of Charter Financial, joining us. Good morning to both of you.
Good morning.
It's got to be bad if we need two people to talk about the economy, right? Secretary Paulson said last week 2008 will be a more difficult year for the global economy. More difficult than it already is? How can it get much worse than it is now?
Well, you're going to see a lot of banks go out of business. You're going to see some companies go out of business because credit is drying up, and a lot of these companies and banks are just not making enough money to exist.
Jim, you said some 500 banks could go out of existence.
Yes, and I didn't pull that number out of a hat. I've talked to venture capitalists and banking experts who have been inside, looked at the bank books, and they say at least 500 over the next 2 or 3 years will be closed or merged with a stronger institution.
Why is that? Because they made bad lending practices on mortgages and they're hung out to dry?
That's primarily it. They've made bad loans, not only on mortgages, but there are more bad loans coming home to roost. They've made a lot of bad commercial loans as well.
We said that even the wealthiest now are cutting back. People don't know what to do. And then there are those who are losing their jobs, losing their homes. We had a motivational speaker on talking about several things to do, and one of them was to take action. But a Post article talked about this taking action, called it action bias. And you're not too sure that this is what we should be doing, Susan.
Well, you know, as a money manager, I see this all the time. If we have a few days of a downturn in the stock market, I suddenly hear from clients who I haven't heard from for a long time, and they always want to, what do we do? Do we take our money out? Do we sell? And I say no, you know, because your portfolio was built brick by brick, you know, with an understanding of where we were going. People have been talking about the housing downturn and the bubble for 5 years. That's not news. So we knew this was coming home to roost, so we built the portfolio that way. After it falls is not the time to be just selling. It's the time to, if you built your portfolio well, to stick with it. So it was funny when you said action bias, because I said I feel just the opposite. I hate action bias. And you know, the flip side of that is when markets are doing really well and people are making great returns on the portfolio, they tend to do nothing. And that's the time when they should think about taking their winners and taking some money and reallocating it to some other things. So it's a very interesting phenomenon.
It's just the reverse.
Yeah.
A lot of bad economic news last week, and we saw the Dow react to it. One of them being GE, which everyone says is almost like a bellwether of what other companies are doing, and if that's the case, it's not looking good.
Right. GE is the gold standard. I mean, for years, you could put your money in GE stock and be assured that at the end of the year you would have more money than you had when you started. That is no longer the case, and when this gold measure starts to deteriorate, that's problems for the broad market.
The Secretary of Treasury and the Fed chairman also trying to stave off the dollar just falling lower and lower and lower. And Susan, you're very interested in this. What does this mean if the dollar keeps falling? I think it's a tough line they have to walk, because a weaker dollar actually helps our economy by way of allowing us to export goods and services overseas, because it's cheaper for those folks to buy our stuff. And some think that that has helped us forestall a recession a little longer. The problem is that the dollar can't fall forever, and there's a sense that maybe we need to, a lot of this is politics, and that's the point of this segment, is that, so now we're hopefully seeing a shift where these economists are talking up the dollar and saying that the government will take action to keep it propped up. And I'm excited because I told you I bought the dollar for clients a couple weeks ago, thinking the bad news can't go on forever in the dollar, because the Fed has to step in and raise rates. And do something.
It's killing senior citizens. People who have money in the bank are losing because they have a negative rate of return. And how is that? Well, your money market is paying maybe 2%. The rate of inflation is 4%. So if that goes on, you know, your purchasing power is shrinking and shrinking. So the Fed has to raise rates, because it's really, it's not right for people on fixed incomes. They're carrying this whole crisis on their back.
All right.
Well, you know, and Wachovia announced,
very quickly,
you know, just be careful. Don't keep more than $100,000 in bank accounts.
Because of FDIC.
My last message.
Yeah, it is. So definitely watch out for that. Things haven't changed on that. Susan, Jim, good to see you.
Thank
you.
We'll be right back.